Hello everyone, this is Equity Management Academy, with our exclusive weekend webinar. The conflict in Ukraine is straining the global food supply. Food prices are soaring. Global food prices are up more than 20% since 12 months ago. We are just coming out of the pandemic, which significantly affected prices. Now the war in Ukraine is pushing up prices. The UN warned that we may be looking at a global food crisis not seen since World War II. The total caloric value of food exports from Russia and Ukraine are about 12% of the world's caloric intake. If Ukraine can't plant now in the midst of a war, they will have far less to harvest at the end of the growing season. Russia and Ukraine are huge agricultural producers. In 2021, Russia exported $37.3 billion of agricultural products. Ukraine exported more than $27 billion. They are a breadbasket of the world for corn, about 25% of exports in the world, and sunflower oil, 74% of world exports. Ukraine has banned exports of several grains, sugar, meat, and other food. In March, Ukrainian food exports fell 4 times less compared to February. The Ukrainian access to seaports is also threatened or cut off by the Russian invasion. In the midst of war, Ukraine is facing diesel shortages, and since most men are in the military now, there are far fewer people to plant and harvest. Fertilizer prices are also rising quickly. Ammonia, nitrogen, nitrates, phosphates, potash, and sulfates are up about 30% since the start of 2022. Russia and Belarus are big exporters of fertilizers, and with sanctions against Russia, those exports have dropped sharply. Natural gas prices are also much higher, and it is used as a feedstock for nitrogen-based fertilizers. If we produce less fertilizer, then less is used and yields are less, which could affect global food supplies. Global warming and supply chain issues had made global food supplies tight even before the war in Ukraine. North America had a drought that affected the wheat crop. Soybeans in Brazil were hurt by a drought too. Food prices are at the highest level in 2 years. The U.S. Department of Agriculture predicts a 4% increase in food prices this year. The war in Ukraine will only further increase food prices. The U.S. is a net exporter of many foodstuffs, but food prices rise globally and will affect U.S. prices in stores. Consumers will see it. A food shortage is unlikely to occur in the U.S., which imports very little, if any, food from Ukraine or Russia. We will see price increases, but not shortages. Shortages and rising prices will harm some countries and marginalized communities. A global food crisis could lead to further conflicts around the world. The Arab Spring was, in part, triggered by rising food prices. The Middle East imports much of its wheat from Ukraine and Russia, a supply which is now threatened. Some countries are banning exports of food products, such as Hungary and Serbia. It is a short-term solution by keeping prices lower in that country, but globally it just pushes prices up. Such moves also tend to spread, which can lead to a massive decrease in trade, and the global food supply will be further impaired. Other countries could produce and export more food. As prices rise, the incentives to produce more increase. The European Union is going to try to release some of their set-aside acres for production this summer. The US is considering doing the same with conservation acres. The US could also look at biofuel policies. About 40% of soybean oils in the US go into biodiesel, which becomes questionable when food is scarce and prices are soaring.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC-PMI algorithm. The VC-PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC-PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC-PMI? The VC-PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC-PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC-PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.